Hello, welcome to the lecture on how does a company make money? A very fundamental question, but one that if you understand it, you will be able to move forward in so many different areas of finance. From a very basic point of view is that the company needs something they sell something, okay? And they sell something for a price. So in the case of GENESEO Coffee Company, they sell pounds of coffee for a price per pound. So sometimes you're going to know what they sell and the price they sell it for. So if you know how many pounds they were sold and the revenue that was earned, you can determine how each pound was sold for, or vice versa. Either way, looking at it, it's always a volume of something and a price for that unit. So think about GENESEO Coffee Company. They sell coffee by the pound. They charge X dollars per pound. Those two multiplied give us revenue. So what we're going to focus on is very simplistic companies this semester, where you will be able to figure out what that revenue driver is, and you could understand the product volume, something they produce, and the revenue. You may not have all the pieces, but you can find it. So when you think about it, they make money by selling stuff. Then when you look at it, whatever they sell, it costs money. And this can be either products or services. It doesn't matter. The company makes money when they bring in more in revenue than what they spend to make and sell the product. Basic, right? So if you have income of X, you want to have expenses of X minus something to end up with a profit. Now, how do they make more money? Well, to grow sales. How do you grow sales? Think about GENESEO Coffee Company again. They need to sell more coffee beans or increase the price of the beans, or a combination of both. You can also look at the cost side and produce the same amount of beans at a lower cost, or produce more beans at the same or lower cost. If we produce more beans and the cost goes up, we lose. Seems straightforward, doesn't it? Well, to understand a company, you need to know how they make money. It seems easy, but important to be very granular and specific. What are the volume and price indicators? They vary for each business. Now, when you look at a really big company that has multiple products, this becomes very complicated. But we're going to stick to companies where you'll be able to find what the volume driver is and the revenue driver, so that when you multiply the two of them together, you'll approximately get the total revenue. Now, this will move its way through all a financial statement analysis. So they vary, and your challenge will be to figure them out. Now, where do you get information for this? You get them from the company's 10K and the investor presentation. Let's take a brief look at how do you find some of this information. One company I'm going to take a look at is called O'Reilly Auto Parts. And what I did is I went to Google and I put in O'Reilly Auto Parts, and it came up. Now, most of these sites will come up with product information. So we go all the way down to the bottom on this one, and it says about us. Careers, always a good thing. Company overview, which will tell you when you click down about a little bit about it. The history. They're founded in 1957 as a single store, grown to a business of 5,190 stores in 47. So we can go through all of their mission statement, but if we come back up to the top, what we're looking at is investor relations. So we click on that, and what we find is there's a number of options here: leadership, financials, SEC filings, governance, newsroom, and to be able to contact us. So when we look at it, the SEC filings are those things that were actually filed with the Securities and Exchange Commission. Now, what we're going to look at is financials. So if we click on financials, what we see that has come up here is it tells us our annual and quarterly forms that are filed. These are the SEC forms for 2017, 16, 15, 14. These are annual. These are quarterly. In the annual, there's more detail. The proxy statement consists of information on corporate governance, compensation of officers. Most of our work we're going to follow right around here on a PDF format. But one of the most important things is if you come down, there's presentations. In the presentation, I'm just going to open that right now. And when you click on that, you get something that's called Analyst Day. And this is where the company discusses its operations with the analyst community. These are people who examine, are following the markets, following this company to understand it, to make a recommendation. So if we look, we see where it is. There's a little schedule. Talks about the company, management team, but it gives you an overview of the company. There's their stores, everything about it. Gives you what their market is. They look at do-it-yourselfers versus professionals, which is important in understanding it. How many stores they open, what the impact of the tax cut was, what is driving the industry. This is from the outside perspective. So they walk you through all of this stuff, and you can see here's all the competitors, what they have there, what's their strategy. So this gives us a good opportunity for any company that you're working with. I always tell folks, this is where I always start when I'm looking at a company. I want to look at what this is, the analyst report. Because I want to get not just pure financial information, but what is it telling me? And then how can I analyze this? Now, when you're looking at it from an external perspective, you'll have this. When you're looking at it from an internal perspective, it'll be a little more difficult to gather because you're the one that's going to have to be putting it together and interpret it. So in this case, finance analysts at O'Reilly prepared this for us to look at. Let's just go back real quick to the PDF for the annual report. So I will bring that up. And the first part of the annual report is it highlights things. This is the fancy color spot. So they talk about what's going on in the business, its history. But then we get into the Form 10K. The 10K is an annual form filed by publicly held companies with the Securities and Exchange Commission. And it tells us everything about the company, where they're incorporated, their taxpayer identification number, and then it comes down into a table of contents. And I think one of the things that anything you're looking at in this course, or any analysis you're doing, the answer is most likely in the 10K if it's not in the analyst presentation. The analyst presentation is really an interpretation and a presentation by management of the information in the Form 10K. So as we're going through this, we talk about the business, risk factors, if there's any issues with the SEC, what properties they own, legal proceedings, but then we get down into the meat. Okay, what's the selected financial data? This item 7 here, management's discussion of financial condition and results of operation. Quantitative and disclosure about risk. Financial statements and supplemental data. Changes and disagreements with accountants, controls and procedures. So if we go down to page 25, first of all, let's stop here. They tell you a little about their business. What is it that they're doing? You can often find the strategies of the company and the volume drivers. And what are they going to do to grow? So in this case, think about this. I'm just going through it. And what's their growth strategy? Aggressively open new stores, grow sales in existing stores. So what do you think the drivers are? Stores and sales per store. So what we have found in here is if that's how they're going to go, we can look at that from an analytical perspective. There's other things, but the bulk of it is opening these new stores and growing existing store sales. So I found that in the 10K under the management discussion It's also in the Analyst Day. So when this question comes up in the work that you're doing and in the first quiz and in application project 1, you're going to need to find this. Okay? So let's go back and keep going. So here's a couple of examples. A company called Fiesta Taco. Their volume driver is number of restaurants. They have 312. The rate driver is sales per restaurant, and there's a number there. So what we're looking at is this company, if they make money by number of restaurants they own and the sales per restaurant. So if they open up more restaurants, they'll grow. If they can sell more per restaurant, they will grow. So it's a function of those two pieces that gives us total revenue for Fiesta Taco. Now, O'Reilly Auto, which we took a look at their 10K and their investor presentation, the driver is number of stores. So they have 5,019 stores, and the sales per store is 1.788.74. Okay, so just under $2 million per store. So what you're doing is you're trying to find out what those things are that drive the business. Now, you'll know if you did correctly. Well, you will know you are correct when you multiply your volume driver by the rate driver, and it approximates the majority of the company's sales. Why is this stuff important? Well, it's important for a couple of reasons, because everything in the future is dependent on increasing sales. Companies just can't cut costs and be sustainable on a long-term basis. So that's what's going to determine this increasing sales, is what's going to happen to the company in the future. But more importantly, finance is about providing information that's usable to both external users and internal users. So internally, it's used for resource or capital allocation, compensation, planning. External usage, it's for credit decision and for investment decisions. So this is what's important in how a firm makes money. Now, I'm going to tell you up front that the first weekly quiz we are going to have will have a question where you will need to go to a 10K and investor presentation and find out both the rate and the volume drivers. So if you have a question about how to do that, please make sure you let me know, because it will be a question on the test, and it'll probably be 2 companies, and most likely will be worth 7 to 8 points out of the total. So it is an important thing, but it's fundamental because everything grows off of that. Please let me know if you have any questions.